Good morning, guys. Today we're going to talk about income statements. Okay, so here's an income statement. This is a W-2, and this is how you read it. So up here you got your employer's information, their name and address. Here's your information. Okay, it should have your social security number on here, be right up here. Okay, and then it tells you wages, tips, and other compensation. And then it also has Social Security wages. Now, those numbers can be the same or they can be different. It depends on certain benefits that you have. Okay, now I know that if you're qualifying, if you're trying to use your W-2 to qualify for a home loan, you're going to use the bigger number here. Okay. And then it shows how much your federal income tax was withheld. So they withheld $15,780. They held out $5,710.20 in Social Security tax. They held out Medicare tax of $1,335.45. And it also shows state income tax down here at the bottom. Okay, so all that information is on your W-2. Okay, now, how much federal tax, income tax, was withheld from Amy's income? So I'd go up here to my federal tax, would be right here. So it'd be $15,780. How much state income tax was withheld from Amy's income? All right, that would be right here. State income tax, so that was $5,523. And what is Amy's reported taxable income? Okay, so the taxable income here is going to be the wages, tips, and other compensation, $78,900. What percent of Amy's income went to federal income taxes? Hint, divide taxes by income. So let's see, that'd be 15,780 divided by 78,900. All right, so about 20%. Okay, so that would be, here, let's write that down, 15,780 divided by 78,900 comes out to be 0.2 or 20%. What percent of Amy's income went to Social Security tax? All right, so the Social Security tax was $5,710.20. So $5,710, $10.20 divided by 78,900 comes out to be 0.072, which is 7.2%. And what percent of Amy's income went to Medicare tax? Okay, so we got to go find her Medicare tax. That was $1,335.45. Divided by 78,900. Comes out to 1.7%. Comes out to be 0.0169, so we'll say 1.7%. There's a difference between box 1 and box 3. What is the difference in the amounts of money? Is there any other reported amounts of money that may account for this difference? Okay, so there is a difference. So box 3 is $92,100, and box 1 is $78,900, and the difference is $13,200. Okay, now this is, I wonder if this is okay, so here we have $12,200, and here we have $1,000. So there's your differences, these amounts right here. And those are different types of compensation. And we'll talk about that a little later. Okay, how much federal and state taxes will be taken out of this person's income for the year? So let's see. Okay, so this is the pay period from 3/15 to 3/28. So YTD stands for year to date. This is the year to date. And this is the amount per paycheck. So this is, we'll say pay period. Okay, so this person got paid from 3/15 to 3/28, got paid $4,596.39, and the year to date is $32,174.73. So that's all February 1st. Okay, so we need to figure out how much of the state and federal tax will be taken out for the year. We could do this a couple of ways. Basically, this is 3 months. Okay, so we could say, okay, over 3 months, if we just multiply that by everything by 4, we should have it for the year. So federal taxes would be, they've had $7,067.89 taken out, so we can multiply that by 4. And that's going to be about $28,271.56. Now, this is an estimate, because we don't know for sure. We don't know enough information about this to know, does this person gets paid the same amount all the time? Is this a bigger paycheck than they're normally used to? Is their work seasonal? Do they get paid more at certain times of the year? So it'd just be estimated. The state tax, okay, so the state tax, there was $1,977.50 taken out, so we could multiply that by 4. So that would be $7,910. And again, that's estimated. Okay, what other questions we have? I guess that's it for this page. How much federal and state tax will be taken out of this person's income for the year? Okay, so we've got a pay stub here. And let's see. We've got a pay period that's 5/5 through 5/11. So this person gets paid every week. Federal tax. Here's what I would do on this one. I would probably say, okay, the current pay, $52.60, with federal tax was taken out. So I would just multiply that by 52, because there's 52 weeks in a year. And this is a 1-week paycheck. So 52.6 times 52, it's going to be about $2,735.20. Again, that's estimated. Okay, so that'd be the federal, and then the state taxes. They had $21.38 taken out, so $21.38 times 52 weeks. That would come out to $1,111.76. Okay, using a W-2 and a tax schedule to predict a refund or owing. So this is a single person. Here's the minimum tax rates and the maximum tax rates per bracket. There's how much the tax is. So this person had taxable income of $78,900. Okay, so we're going to go ahead and we're going to find that this person is in this range right here. Okay, do we have the little chart down below? Nope. Okay, so we're going to estimate how much tax they pay. It's going to be $453.50 plus 20% of any amount over $38,700. So we got to figure that out. So that's going to be $78,900 minus $38,700. So the difference is $40,200 times 0.2 for 20%. It's going to come out to $8,040. So I need to add that over here, and the total tax should be $12,493.50. Okay, so they had $15,780 taken out of their check. Okay. So if we subtract that, we get a negative number. We get negative $3,286.50. Okay, so since it's a negative number, that means they're getting a refund. That's how much they're getting in a refund, approximately. Now, there might be other things that affect that, but I think this person is pretty safe for having to pay any additional tax. They've obviously overpaid by quite a bit. So even if there was some adjustments that caused this to be reduced, they're still probably going to get a refund. Okay, other forms of income that are not reported on a W-2 are reported on what's called a 1099. So a 1099 is something that's issued if taxes have not been taken out. Okay, so there's different kinds. There's the 1099 MISC, that stands for 1099 Miscellaneous. And that's just for odd things that you've been compensated for. So there's that could be a lot of different things. Miscellaneous pretty much says it. Okay. The 1099 DIV stands for dividends. Okay, so this would be, you'd receive this if you had stocks that pay dividends. Okay, so dividends, in case you don't know, a dividend is where a company will pay you part of the profits that the company made for the year. So some stocks have dividends, some don't. Some have big ones. Some of the best ones are utilities, okay? Because there are things that everybody needs. They're easy to predict how much people are going to need usually. And it doesn't take once the infrastructure is in place, it's pretty much set for long periods of time. So these companies they pay large dividends. The stocks don't usually move very much. They're very slow movers, but people are attracted to them because they can get income from them. Some stocks don't pay a dividend at all. Okay, 1099 INT, this stands for interest. So you would get this if you had bonds or something, some kind of investments that pay you interest. And the 1099G, the G stands for government. The only one that I know about that you get with this is you get one of these if you got a tax return the previous year, a refund. So, given for refunds previous year. Because, of course, they're going to tax you on that. So, this is a 1099 miscellaneous. So this person received $5,678.90 from Northeast Publishing Company. So she could be a writer. She's self-employed people never get W-2s. They always get 1099s. I used to get a whole bunch of 1099s when I owned my own mortgage company. Every lender that I lent money for would send me a 1099 at the end of the year saying, this is how much we paid you. And they would send it to the IRS too, so that I had to turn that in. Okay, that's it today, folks. Here's page 14 and 15. So you just got to be able to read your income statements. So this one looks like it's a W-2. And then we've got a pay stub. Here's a W-2. Doesn't look like there's any 1099s. So give those a stab, and I'll see you next time.